Welcome to the BF Anderson Technical Report for August the 11th. You know, we are in the throes of earnings season right now, and I think earnings are very important when it comes to the direction of the bull market. Now, what I have here again is the S&P earnings, a graph of the S&P earnings, and what I've done with this graph is to simplify things and really for illustration only, I've got an 8-month moving average, a 10-month moving average, and a 12-month moving average. So the blue is the fastest moving average, red second fastest, third would be the 12-month and the slowest moving average. So the general idea is you want to see crossovers of these moving averages. Now, if we go back to 2015, 2016, you can see that corporate earnings were in a definite downtrend, and we were in somewhat of a bear market during that period. Then all of a sudden, around the time of the election, and I know that most people want to tie the reason for the stock market rally to the election. Well, I think it's interesting to note that corporate earnings started to kind of break their downtrend around August, September of 16, bottom in November, December, then turn up right around the first of the year. So you can see here that corporate earnings are definitely recovering. We've got the fastest moving average on top, and everything is in an uptrend. So corporate earnings are looking up and looking better. Now, I wanted to also kind of remind everyone using the same concept of the 8-month, the 10-month, and 12-month moving averages. And I want to go back to 07, 08. Now, remember, this was the financial crisis. This was a very, very bad bear market that was very similar to 1929, in my opinion. Now, you can see here the blue, the fastest moving average, broke down first. Then we just saw the rest of the moving averages break down, and we go into a downtrend. So this is what a bear market looks like using these moving averages. So let's stop for a minute and let's look at a bull market cycle. This is 1995, 1996. This was a really good time for the stock market. It did quite well during this period up until around 2000. So you can see the pattern of the moving averages. You got the blue on top. Everything's in a nice strong uptrend. So where are we today? Where are we right now? Now this is as of the most recent month, and we again 8, 10, and 12. You can see that these moving averages are all in very strong uptrends, and this does not look anything like a bear market type situation where everything is in downtrends. It looks more like the 1995, 1996 period. So just kind of be aware of this, that from a pretty much long-term perspective, the market looks very healthy. Now, we all know about the current news, what's going on with South Korea, North Korea, and so forth, and it is having an impact on the market. But I think more importantly, corporate earnings, we are in the middle of earnings season right now, so it's like no coincidence that things are kind of volatile and acting kind of soft. Now, the weakest index of the indexes that I follow are the small cap stocks. Now, again, this is not a good sign. It is showing you that there is a breakdown in the small caps. They are below the moving averages. So my personal opinion at this point would be that you should have some cash. You should be very careful about doing any new buying. In fact, I would avoid new buying at this point because this is a yellow flag. This is a warning. Now, the strongest index of all the indexes that I'm following, and this is actually not an index but an ETF called the EEM, which is the Emerging Markets ETF. And you can see that it is holding above the lower moving average. So actually the emerging market stocks are holding up the best of all the indexes that I follow. So let's just get into the top 5 here. This is a new name to the list. This is Align Technology. They are involved in a dental product where instead of having braces, you have these clear alignment devices that go in your mouth, and it does look to be fairly popular. The stock has been acting real well. They did announce earnings. Everything looks good. Very strong uptrend. Now, again, back to emerging markets. China Lodging Group. This is the Holiday Inn of China. You can see above the moving averages. Recently made a new high. Did pull back yesterday with the market, but continues to look strong. Here's another Chinese retailer. This is JD.com. This is a e-commerce retailer. Again, you can see the strength. The moving averages have crossed the faster moving average above the slower moving average, and the stock has recently made a new high at 49, has pulled back yesterday with the market. Now, again, this was a new name that came on recently called NRG Energy. This is a utility that's going through a reorganization of its balance sheet and does look interesting. You should keep an eye on it. The final stock on the list, again, is a biotech stock, Vertex Pharmaceuticals. Now, it has shown some weakness here and is challenging that 25-day moving average. So in conclusion, we all are very aware of the fact that the market is having a pullback here. But if we look at corporate earnings look fine. And then if you look at our current situation, it really does look good here. Now, it is also interesting to note that the earnings upturn in the S&P was also matched with an upturn in the moving averages. So if you have any questions, please feel free to give me a call. Thank you.